We are pleased right now to be joined by Tom Speechley, CEO of Abraaj North America. Thank you so much for being here with us.
Thank you very much.
Tell us a little bit about your company and what you do.
So we're a private equity firm, and we invest in what I think are some of the most exciting markets globally, including Africa, Latin America, Southeast Asia, Middle East, North Africa, and Turkey. We manage about $9 billion, and we've been around for about 15 years. And what we typically look for is companies in the consumer space where, frankly, historically, there's been low investment, but there's huge demand-side pressure driven by demographics and urbanization. And what we found is sectors like dairy, like healthcare, logistics, education, any consumer sector, product or service does pretty well if you pick the right company.
Tell us a little bit about Africa and your transactions in Africa.
Yeah, so we've been investing in Africa for over a decade, actually, and before it was fashionable. And you may not know it, but it is now fashionable. Africa has become a destination of choice for investors, even in the US, actually. And the reason for that, I think, is a number of factors. One is it's had a game-changing decade. GDP has quadrupled. Some of the fastest growing economies in the world are in Africa. Now, that means you should invest in them, but certainly it's a very high growth economy. And for years, people thought about Africa as a destination for capital, for resources. But we realized quite early on that actually it wasn't a resource play, commodity play, where you're subject to the foibles of the market, but actually it was a consumer play, because Africa's actually got the youngest population on the planet. Average age in sub-Saharan Africa is 19. 70% of the population under the age of 30. And that's a very attractive place to invest because consumers, mass market by necessity, consumption by necessity, is a very predictable place to be investing. If you've got a good company, it's a predictable place. You've got consumers right there for you. So it's a very exciting place to be investing.
What countries in particular and what sectors?
So we tend to favor 4 main hubs, which are South Africa, Kenya, Nigeria, and Ghana. And then the gateway into Francophone Africa is Côte d'Ivoire for us, but also Senegal. And what we typically do is we find a company that is poised to be a country or regional champion, invest in it, accelerate its growth so it becomes the champion, and then sell it to a strategic buyer.
And then how about your presence in Latin America?
So LATAM for us was very much not Brazil. A lot of people went to Brazil. We decided actually Mexico was the anchor for us. We added Peru and Colombia, so it's Mexico plus the Andes. And you probably are obviously aware that in 2012 those countries formed the Pacific Alliance. And they've brought down their trade barriers, the tariffs are gone, and it makes it a very attractive block, economic block to be investing in. So for us, you know, one day we'll be in Brazil maybe, I don't know, but for us we've had a lot of success in that part of the world.
Now globally, speaking generally, what do you think the forecast is for M&As for the rest of the year?
Well, I think it's difficult to find intrinsic value anywhere in the world. Now, that's not to say that deals won't happen. If you look at the highs that you've recently seen in the US markets, there seems to be no end in sight for that rise. And there's a lot of corporate cash on the balance sheet, which surely now with negative interest rates in lots of parts of the world, or effective negative interest rates, is going to mean forced investment. I see a lot of M&A activity happening, actually. I think people, though, should certainly not overlook the growth markets, where you've got this new class of regional champion, in many cases, potential global leaders coming through.
And when we talk about these growth markets and macro trends, such as the strengthening dollar, the declining euro, energy prices, what effect does that have?
Yeah, so you can't ignore those issues. The Fed effectively sets monetary policy for most of the world these days. But some of that's been priced in. I think FX impacts are quite significant, and we have to work at that. We have to do something about that. But you know, the consumer in Nigeria, the consumer in Kenya is not linked to the global economy typically. There's no leverage there, so they're still buying milk, whatever happens at the Fed.
Okay, well, thank you so much for joining us here today, Tom. It's
Pleasure.
great to talk to you.
Likewise, thank you.